Welcome to HPK Provident Advisors Friday Live. Of course, this is when one, two, or all three of the partners of HPK Provident Advisors with offices in Bridgeville, Pennsylvania, and Sarasota, Florida, get on Facebook, 12:30 p.m. Eastern Standard Time. Talk a little bit about the markets, talk about financial planning, and kind of tie it all together for you. This is Friday, August 1st, 2025, and you've got me, Brian Peluso, Michael Kutch, who's coming to us from Florida. Of course, I'm one of the financial planners here, and Mike is our portfolio manager. Spend a lot of time customizing portfolios for our clients. They are unique to our firm because Mike builds them and manages them on a regular basis. So normally what we do is we kind of summarize some of the social posts that we put out. Mike on Mondays puts a little bit of information about the week ahead in the markets. So this coming up Monday, you're going to see a social post that talks about what the data that's coming out in the markets and how that might play into portfolio construction. And then Tuesdays, we usually have a post that's a little bit more personal. For example, next week, I created a post called Life is a Party, and that's all I'm going to say about that one, and I hope you read it. And so we usually summarize the posts that we put out on Monday, Tuesdays, Wednesday. We've got some financial planning ideas. Thursdays, also some planning ideas. That's what we normally do, but this could be a little bit different on this Friday. We had some important economic data that I think would be appropriate to cover. So, Mike, I am going to turn this over to you and kind of lead into that, and you take it in whatever direction you think would be helpful and interesting for the folks that are watching us today.
All right. Yeah, I've been calling this week the Super Bowl of finance because pretty much every important economic indicator came out, as well as a lot of earnings. So we had about 40% of the S&P market cap reporting, including 4 of the big mega cap tech stocks. So those were kind of mixed. We had 2 that were solid reports and 2 that were kind of on the weaker side. And then in terms of economic data, I'm going to start with the highlight today, the jobs data. It was not a good one. The headline payroll number came in at 73,000 jobs versus consensus of 115,000. Now, that's not great, but where the weakness really showed up was the revisions to the prior 2 months, which were revised lower by about 258,000. So that brings last month's June's number to 14,000 and May's number to 19,000. So now we're at a 3-month average of about 35,000 jobs. Without those revisions, it would be close to 100,000 higher. So it's really a change in perception of how we viewed the labor market. Now, we have been talking about the potential for weakness to emerge in the labor market. So maybe we're starting to see that now. Fortunately, there is some positive things. Jobless claims remain low. The unemployment rate did tick up 1/10, but it came in line with expectations at 4.2%. So not necessarily a high number. Now, there is a theory, and Powell was talking about this a little bit at the FOMC meeting, and I will go into some details on that. But given the decrease in immigration and decrease in participants in the labor force, if that comes down in tandem with a slowdown in payroll growth, with job growth, I should say, you could have the unemployment rate remain relatively stable. So we'll see if that dynamic plays out. I'm probably anticipating a slight uptick, at least in unemployment rate. But the wage numbers remain strong, came in at 3.9%. So that's very healthy in terms of versus the inflation data. We did get the PCE data out on Thursday. Now, both of these were after the Fed meeting. So on a month-over-month basis, came in line both on headline and core, but 1/10 higher on annualized headline and annualized core, which came in at 2.6% and 2.8% respectively. Other jobs data, job openings roughly in line, about 7.43 million. That is a decrease from the prior month. And then ISM manufacturing came in weaker than expected. It's one of the longest stretches we've seen for manufacturing to be in contractionary territory, characterized by a reading below 50. So not really a healthy signal. And then the FOMC meeting. I think the biggest highlight. Now, I'm sure everyone knew that there was no change in the Fed funds rate. It still remains at 4.25% to 4.5%. However, there was 2 members that dissented, meaning they were in favor of a rate cut. So I think it's good to see some dispersion among Fed members. We certainly don't want them to fall into the groupthink mentality. Right. Following Powell's comments, the market did lose the gains throughout the day, ending in a slight loss. My biggest takeaways, really nothing was too surprising. We're above the inflation target. Employment remains healthy, even though I guess he didn't see the jobs report coming out today. He did flag risks to both of those mandates, though, and we are seeing some risks in the labor market now. Let me pull up a chart of the S&P 500 because you can see the gap down today. We were down about 2% at the lows. Maybe that's going to be a short-term top. That's kind of what we've been calling for, but we'll see if we get further follow through on Monday. In terms of, I just want to flash some of the bond markets right now as well. The 2-year is down almost 22 basis points today. So that's really an indicator of what the Fed's going to do. I think the predicted rate cut expectations it went from about 40% for a September cut to now 70%. So that's being reflected in the 2-year. The 10-year is also down quite a bit, about 13 basis points. This is more of an indicator of inflation as well as economic growth. So not necessarily a good thing to see that one drop, but at least people with a diversified portfolio have some offset in the bond market to kind of tamper down some of those equity declines they're seeing today.
All right, so the bonds are doing a little bit better, so people are buying bonds.
Yeah, bond yields down means bond prices up.
And when people buy bonds, it's generally an indication, in general, and this is kind of real-time data here. Things change all the time. That means people are saying a little bit of a run to a safety for immediate purposes.
Yeah, and you see the momentum indicators. The RSI pulled back from overbought territory. Looks to me like it's still above 50. 50 is kind of that neutral level. So you start getting below that, sentiment's getting a little more bearish. So we'll see if we get a bounce there on Monday or see further follow through. I don't think the economic data next week's really going to be a main market driver. We're just going to continue watching the earnings numbers come out. We'll get durable goods orders on Monday, ISM services on Tuesday, jobless claims is always on Thursday, as well as the consumer credit report, which I'm pretty interested to see that because I've heard recent reports about the higher income cohort seeing an increase in delinquencies. So that's certainly not a good economic sign.
Right. So to summarize it, we did not, the Federal Reserve did not change interest rates, but there were 2 members of the FOMC, Federal Open Market Committee, that said, hey, we should cut rates right now. And maybe on this data, maybe they were right. But they didn't change rates right now. So we have no change in the interest rates from the Federal Reserve. Economic data was mixed, but really the stuff that we got this morning, not great. How do you summarize that, Mike? How does that change? Does it change? Are you just observing? You're always observing very closely all of this, but how does that change your thinking? Does it change your thinking? Or is there more to be seen?
There's more to be seen. I mean, you got to it's one report, even though the 2 months prior were revised lower. We all know from Doge and the government cutbacks that government employment has really been coming down. But I think in the June report, the revision, we only had 3,000 or so in the private sector. So that's not a healthy signal. So it's going to be something I'm keeping an eye on. We did get a little more cautious 2 Fridays ago. just thinking the market was a little overbought, valuations are high, and the market was pricing in a lot of good news and not really pricing in any of the potential risks out there. So something to keep an eye on. If we do get any real deterioration in the labor market, guess what? The Fed steps in, and the market probably likes that.
Well, one of the values that we provide to a lot of our clients, I can't say all of our clients, is that as these things happen, and a lot of the portfolios, depending on clients' preferences and their goals and their financial situation, and a lot of the portfolios that we have, Mike can go ahead and make changes as we feel are appropriate for a specific client, for their time frames, for that part of their financial life. We can go ahead and do that. And for a lot of the folks that we work with, there's great comfort in that if changes need to be made, we're going to go ahead and do that. That's not 100% of our portfolios, by the way.
Yeah, and we don't get too extreme with positioning because it's tough to time the market, but we do have the highest cash percentage since 2022 now at this point.
Okay.
So if we do get a sizable pullback here, we're likely going to be a buyer in the equity market, take advantage of it.
Well, with the higher cash position, that obviously gives you the opportunity to find bargains, as some people would say in kind of layman terms. Yeah, obviously a great point. I certainly don't want to give anybody the impression that we make a massive cash call and everybody goes to cash. We are still long-term diversifiers of assets based on timeframes and risk tolerances for individual clients. But we certainly do make important adjustments. Mike does certainly make important adjustments as all of this data comes along. And so that's very helpful for a whole lot of our clients, a whole big group of our clients. You know what? But that was tremendous. And like I said, we can kind of call an audible as important data comes out. Now, this is where you can find the blogs and the social posts that we put out each week. This is hpkprovident.com. If you go right up here to resources, and so here's some of the things that we talked about. Mike, you covered a good bit of the week ahead because the week ahead was the most important was Friday today.
And I actually had to do a continuation for the week ahead for this coming Monday because when I wrote the original, the jobs data hadn't come out yet. So I thought it was important to get that content out as quick as possible. So hopefully that comes out Monday too. It does have to go through compliance first. So that's always a variable.
Right. Absolutely. Well, we want to make sure that is, the compliance group provides oversight for us to make sure that, and it's really a consumer investor protection measure, make sure that the commentary is appropriate and falls in the industry guidelines.
Our poor compliance lady, she gets so much content from us.
Well, she does it pretty well, and I think we do a really good job of making sure that the information is timely, as accurate as possible at that given moment. Things change all the time. Tax law changes, right? The market changes and whatnot. But she does a great job for us for sure. So David, who's the third partner, he's on vacation this week. He had a post, The Road Less Traveled, and I will summarize it quickly. I hate to speak for him, but summarize it quickly in that, financial planning is really about the different roads that you can go down, and you come to a why in your financial life, and we help guide folks to what we think is the best path for them, while always remaining flexible. There's always exits that you can take, or you can pause your trip. David also talked about how many people throughout history, David loves history, but how many people in history took shortcuts. And although it felt like a good idea at the time, that often taking shortcuts, and I will paraphrase for him, in our world in financial planning, the shortcuts are, hey, find me the next best thing. I want to go straight up and never down. Those shortcuts don't work out very well. Oftentimes on a trip, as the road less traveled, you take the shortcuts and you end up getting lost. And then it takes more effort to get back on track. than it did to even if the shortcut had worked. So David talked a little bit about that. It's a super interesting read, much less technical than some of the things that we do. Mike, I was fascinated by the shipping traffic. Now, this really kind of speaks to all the different things that you look at and different ways to look at all these things. There is no one single measure that says, if this happens, we must do this. It is a culmination of a whole bunch of different observations. And then we take those observations, immediate observations, look into some historical experiences that we have, and then we design things moving forward. But I was fascinated by this. Mike, talk a little bit about shipping traffic and why you'd even look at it.
Yeah, it's a good leading indicator for both the growth prospects going forward, especially in manufacturing. You can also get pretty good insight around potential price impact, whether we're seeing supply chain disruptions. If you recall from back in 2020, we were having ships just sitting off the port because they couldn't come in to unload stuff because of lack of workers. So it's a really important indicator. I suggest everyone read it. It's good content, and it's certainly something I like to look at.
How many folks, how many of the average investors, Mike, do you think sit around and look at shipping traffic? I'm going to say it's very
Are you
low.
saying not everyone finds this data interesting?
Now, I've opened ourselves up for a whole bunch of comments because there are going to be people that have the time and the interest that look at it and say, hey, wait a minute, I look at this all the time. I'm sure there are people that look at it, but it's not a very high percentage. But again, kind of the way we've designed things as I'm doing a lot of the financial planning, interacting with individuals on helping to design and get them on a path to their goals. Mike is able to continue on a regular basis to look at all of these indicators and say, what does this tell us and how should that change our thinking and those adjustments in our portfolio? So it's a great value to many of our clients. I put out a post about after-tax 401k contributions. I'm going to bring up some really fun stuff here.
Yeah, it was a popular post.
So, the idea around here is very simple. And now this is the IRS notice for 2024-80, and it shows what the changes are and how much you can put into a 401k, 403b, 457 for 2025. And the standard answer is you could put in, and there's a bunch of answers, but the standard answer is you can put $23,500 into these plans. Now, if you're over the age of 50, there is a catch-up provision. And you can put an extra $7,500 in there. So if you're over the age of 50, you can actually put $31,000 into your 401k. Interestingly enough, if you're the ages of 60, 61, 62, or 63, you can put $11,250 just for that age group, 60 to 63. They could do $11,250. That's their catch-up provision. So that brings you up to $34,750. Don't look at the notice. Don't count on my simple math. But for that age group, you have a higher contribution limit. But there are some folks out there that say, I really have additional money that I can put into my 401k. Some 401ks, you're going to have to check with your provider on this. Check with your HR department. They can check with the provider of your 401k. Some will allow you to do what are called after-tax contributions. So in a traditional 401k, that's pre-tax. You don't pay taxes on the way in. It grows tax deferred. If you follow all the rules, you pay taxes on the way out. Some 401ks for folks that have additional monies and saying, retirement really is my primary goal. I want to do everything possible to get money towards my retirement plan. Some plans will let you do after-tax contributions. So you pay tax on that money, then you put it into the 401k. You don't get the deduction on the way in. There are limits on how much you can put into a 401k overall. The limit for this year for most people is $70,000. That limit is inclusive of all of your contributions and what your employer might match in there. So there is a maximum. Please read notice 2024-80. There is a maximum that can go in between all of these types of contributions. But the spirit of the post is that if you are one of those folks where you have extra money, you have maxed out the standard contributions, 23,500. If you're over 50, it's 31,000. If you're 60 to 63, you've got that 11,250. If you're one of those people that say, hey, I really need to get a lot in there, you may have the opportunity to do these after-tax contributions. You got to make sure that your 401k provider can separate out pre-tax and post-tax. It gets pretty complicated. We can walk you through that. How that is, but there is a way, possibly depending on your plan and your provider, to do active tax contributions or really load up that 401k, 403b, 457. So take a look at that. It's a little bit more detailed in there. I will tell you, this notice is very difficult to read, but this is the official document from Social Security. So those are the kind of things that we like to look at the economic data. We like to look at some planning ideas. Important to note that not 100% of all planning ideas are applicable to everybody. Please stay with us here in the next couple of minutes for our important disclosures, which will indicate that. So, Mike, talk a little bit about what do we have in the week ahead. We know that we've got your market commentary the week ahead on Monday. What else do we have coming out next week? A little bit of a sneak preview.
Content wise, we have your post, like you mentioned, about planning a party is a lot like life. Wednesday, I wrote an interesting one. At least I think it's interesting, about whether monetary policy still works. So very, very relevant given we just had an FOMC meeting.
I think you might get some comments on that one.
And then Thursday, I believe you have a post about Social Security, taking it while working.
Yeah. So this is an actual case study that we worked on recently. It's retiring mid-year. So this is when you stop working kind of mid-year and start collecting Social Security in that year, because there are income limits. Right? If you're collecting Social Security prior to full retirement age, there is a limit on how much you can make every year before they start pulling back some of your money and asking you to send some back. But there are some unique rules. If you retire mid-year, this is for people prior to full retirement age. Let's say you retire from full-time work. You've made a bunch of money in the first half of the year. Then you want to collect Social Security in the second half of the year. Is that earnings limit, if you're collecting prior to full retirement age, is that earnings limit applicable to the money that you made in the beginning of the year when you were actually working? And so the post addressed that very specifically. It's a unique situation, but not everybody retires from their regular work, from their career on December 31st, and then starts collecting Social Security on January 1st of the next day. A lot of people retire from their employment mid-year, and then they want to start collecting Social Security. Is that earnings limit for collecting prior to full retirement age? Is that earnings limit applicable to you? Check out that post next Thursday. All right, Brian, Mike,
Brian's a great resource for anything regarding Social Security. I would recommend everyone take advantage of that. He used to give seminars teaching advisors about Social Security. So I think I feel more confident going to him for Social Security advice than the administration.
Well, the folks in the administration are great people. They, of course, are understaffed, overworked, super highly qualified, and they do a great job of interpreting the rules. What we do here is not only understand the rules, but how it fits into your life. Mike, I have always said, I'm going to say it again. You get 5 people in a room talking about Social Security. You ask them one question, you're going to come away with 6 different answers, and most of them won't be right.
Yeah,
and
so true.
So Social Security is a very, very personal decision. If you live in a planned community and you have the same white picket fence with the same 2 cars and the same 2.3 kids that are the exact same age, and the person, your neighbor, worked the exact same job for the exact same amount of time, you're still going to have a different Social Security decision than they will. So I'll have more Social Security posts in time, but it's one of my favorite topics. Many people say that When you retire, your largest asset is either going to be your house or your retirement plan, 401k and whatnot. Depending on your lifespan, it's quite possible that the money you collect from Social Security will be your biggest asset, bigger than the value of your house and then bigger than what you saved on the way in. That is very possible. That makes it extraordinarily important to get it right. So, all right, see, this happens to me all the time. People get me wound up on Social Security, and then I wish I hadn't even mentioned it. We're gone too deep. All right, Mike, any other thoughts, commentary?
No, we'll just be keeping an eye on whether this is a short-term top or not starting today.
Exactly. So right at the bottom of the screen, you can see our website. You can communicate with us on the website. You can contact us via there. Also on our website, interestingly enough, for folks that we work with and want us to view things, you can securely share documents with us directly on our website. That is, well, actually, let me bring that up really quickly. Run a little bit long today, but we had some important stuff. I'm going to add this to the stage. And so here's the home button right over here. You can see upload documents. So for folks that want to say, hey, could you review this for me? Don't feel good about sending email. This is a secure way that you can do that. And you can contact us directly there as well. Mike, let's get to the important stuff. This is our disclosure statement. Which says, pretty much everything that we talked about, is real-time data. These are our opinions. Nothing that we are talking about should you act on right now without having an individual conversation with a qualified financial, legal, and or tax professional. Securities are offered through LPL Financial, member of FINRA and SIPC. Advisory services offered through LPL Financial, LLC, registered investment advisor. Brian and Mike, that's us, are registered representatives with LPL. The content discussed is for informational purposes only, not intended as an offer or solicitation to buy any or sell any security. Mike, you doing good over there? Yep. Or any investment strategy. Any opinions expressed are those of me and Mike today. They don't necessarily reflect the views of LPI Financial or any of its affiliates. All investments involve risk, including the possibility of loss of principal. This communication may include links or preferences. We did see some references. We did see links and references to third-party websites. These links are provided as a convenience only. LPL and financial and its representative not responsible for the accuracy of those sites. We did have something from the IRS. I hope we can feel good about the accuracy of that, but you never know. Mike and Brian and HPK Provident Advisors may only transact business in states where they are properly registered or exempt from registration. Please contact us directly via the website. Great way. Phone number. It's up on the screen for information regarding licensing and registration status. Biggest one, you'll see this everywhere. Past performance is no indication of future results. Consult with a qualified financial, tax, and or legal professional on your specific situation. That's my favorite part. And we have just lost 3/4 of our viewership when I started that, but those are important things. Again, these are investor protections. Mike, thank you so much. We ran a little bit long today, but we will be back live. That's next Friday, August 8th, 2025. HPK Friday Live. You can find it 12:30 p.m. Eastern Standard Time out there on Facebook. Everyone be safe. We're going to have great stuff for you next week again.